Hi, hello everyone. Try to make a video here about the top-down analysis that I do, that I perform, and I'm gonna do it a little different for you guys. I'm gonna do it in Smart Trader versus doing it in TradingView because it's a lot easier to do it in Smart Trader, but I'm just mostly used to using TradingView. So either way, we'll get down through it. So the first thing we'll do is we'll go to smarttrader.com, and the stock that we're gonna well, evaluate the most today will be Foot Locker. And this is just a recommendation, just a education. Help everybody, I guess, here. All right, so here we go. Type in something different because we wanted to bring up the euro, didn't it? All right, so here we go. So the first thing about it, for me, and I do it with candles for you guys, but for me, I use bars. And the reason is, to me, I can see the trend better with bars than I can candles. So take that with a grain of salt, but I'm gonna be flipping back and forth as we go through it. But the first thing that I do is I change this to a yearly chart. The year, because I want to see overall how we're performing, as well as it also shows me where we are in the move, so to speak, or what to expect is another part that I should put in there. So right here, I definitely know that this is the lowest point right here, right? So with Smart Trader, I'm trying to just figure things out as I go along. With Smart Trader here, since we know that this is a low, we can do a few things. First thing we're going to do is we're going to draw these really big red fat boy lines. And the reason that change this to a 6. Yeah, oh, that may be too big. Hold on. 4 maybe. Yeah, we'll use 4. All right, so the reason I'd like to use the bigger lines when I do this part is because we really want these levels to stand out. And this is also using a free version, so it kind of helps everything. I guess, wait a minute, let me do it this way. Let's just leave it on 2. Because if I make it bigger than 2, it's going to bleed over. And we're going to go through the motions here. And what we're plotting are absolutes, meaning that the highest point that we had so far that we've made without breaking. And like this line hasn't been broken, this one hasn't been broken, this one hasn't been broken. This one is the current year. We can put one on there in theory. All right. Smart Trader also has another feature that'll draw these for you, but I'm kind of used to it. And we're gonna mark this as a low, even though the year hasn't completed yet. We're gonna mark it, and that'll be our yearly support and resistance in these colors. And another thing that I want to do here, since this is the low, is plot it against these. And with that plot line right there is what it's called Fibonacci levels. In other words, judging by this low and this high, you expect to pull back within this range. I'm not saying that it can't go further because as you see right here, it did, but you expect it to fall within these ranges right here. Because this is where more than likely you will see a bounce. And so as that retracement came into it right in here, it's either that area would have been 25.42. It got lower than that. Matter of fact, on this level, you got as low as 23.03. And then it started going up, had another low right here of 15.14, which was followed by the next year, having a high of 59.53. Now, when we dig down deeper into it, if we stretch the chart back this far, as you can see, this chart went all the way back to 1990. But as we go forward, though, we'll be able to see if I can make this bigger. Yep. We'll be able to see these are a lot better. And you understand why I drew these levels. But these levels right here are absolutes. Like these are very hard turning points because these are yearly values right here, right? And so we'll go to the next one. This would be monthly, right? Oh, wait a minute. Take that off. And so these are monthly values. And pretty much with these monthly values, what we're doing, we're going to stay within a specified range. Now, we can go further out and mark all up here if we wanted to. But our true range between these two yearly resistance points that haven't been broken is right in here, right? And so in this area, this is where we're going to actually do most of our marking. At least for me, that's how I do it. And so I'll come here and we'll change this one. Since we use that for that one, we'll use black for these. That's here. And this one, I won't count this one yet because it did break above this. This right here would have been the high. And until this month close, it'll remain, even though this line is broken it, but this was your high for that area. And then you have one right here. Right? And so when we're looking at it from that perspective, it looks pretty good. I guess you could count this low right here. But for now, we're gonna leave it for right now. Similar to why we haven't marked this high, this low right here. And basically what we're counting are actual turning points. So to show you what I mean, and this is why I like the bars, and I'm gonna flip it to counters and show you why I don't. All right, so let's look at this area right here, right? And imagine none of this happened yet. So let's see if we can do that. Yep, right there. All right, so when you start from this line, this would have been support, right? But you're starting to go up. So these right here aren't considered support. At least for me, they're not. Until we have a reversal toward this area. So these are going up from the bottom. Of course, you see we're using that free level. All right, so this is going up from the bottom. And so this is your area. But look, this is a pullback now. This would have been a significant level. And then further up, 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 up. These are increasing, 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 increasing. And you didn't have another one. So this would have been the only support area. And as we keep going, that's a retracement, right? This is a up. So this would have been one. Bam. This is a retracement. This one pulled up. That would have been one. But this one broke it, right? So it would have been up here and then fall down. This would have been one. And then up here, and these are instituting the same piece. This would have been down. That would have been up. This would have been one. And then down, that would have been one. And then notice that this took them all out, right? All of the ones, this one right here that you would have had, took all of those out. That would have been one. That would have been another one. Got taken out right through here. So once it's broken, that's it. And so this one, going back to where we presently are, this one up here at the top is resistance. And then it broke through. So this would have been support. And it came down, broke through on this one. So that's no longer existed. Came down and made this one yearly support, by the way, which it made. It came to here and to here. But let's back up 1 second. I want to show you something that I didn't think I talked about here. Let's go back to that yearly chart for a second. Or maybe I did hint on it. Right here. When this line, which would have been originally right here, notice that when it hit this point, it went up. But notice that also this region was the area of resistance. I'll stop that. Was the area? I'll stop that too. This area here was resistance quite a bit. Had a breakout, but you notice that these had these two lines sitting through there, one on the left and one on the right. It was teasing this particular level right through here that whole time, and it bounced. But notice that this move led to this move. So in theory, if price returned back to this area, or it became that's gonna bother me, or became a little lower, that would have been another area that we would have been looking at for potential upside swing. All right, so let's continue, keep going. So I think we're on the weekly now. We'll change our thing again. Let's see right here. Still stand between the two red lines, by the way. So right here, here, we're gonna change that from black. Let's make it orange, something that's gonna stand out a bit. So I like that one. Came up. This one. Down through here. It's already filled down through here. That one I like. Fill down. That one I like. And you'll see why I'm drawing all these. A lot of times people don't go this in depth. So that's a good support region for me. All right. And we'll just go to the next one. Daily still stand between those levels, and we're just pretty much looking for levels that weren't marked on the bigger span of things. Pretty good gaps. We're gonna work on. We're gonna talk about that in a minute. All right, so here, change these two. I like this blue. Let's fill. There. Guess that's gonna stop showing up in a minute. There. Price broke through, so those won't count. Okay, there we go. We are there. Now we're gonna break this down one more time, and this is where we're looking to take positions. We're gonna just look right here. MacBook cooperating, want to stop putting all them extracurriculars on there. Yeah, I like that. All right, and there we all go. Now we're gonna start back from the beginning, and like I said, this part is completely up to you. I like the bars more than I do the counters. All right, and I'll change these to candles. And there you go. To me, the candles make you see something biased. All right, and this is what it looks like. And you pretty much got the same pieces. So if you see here, more of a W pattern here. So that would have been a good breakout right here. But if we put the Fibbo line here, notice that it drew us back to this area. So 25, 32, and 39. All right. And now we're going to get rid of this. Because that's if we're trading on a yearly chart, which means that it'd take an extremely long time for that move to materialize. Because these are years. Each candle represents a year. So that's an extremely long time period. So So we're not trading on that part. Let me see something. I think I deleted something. I don't know if it did or didn't. I don't know. I don't know what it did. Look like I took all the blue ones off. Wait a minute. All right, there we go. Let's just take this off. All right. And so now, looking at this level to here, could be considered a pullback or a breaking out area for this year. You know, pretty much a sell-off for this year, but macroeconomically, we can see why. All right, so let's continue on the month-to-month piece. Definitely more down than up on this board, ain't we? All right, there we go. Draw it in. And notice we got a high, lower low, lower high, lower low, higher low. I mean higher high right here. Or same high if you want to say it that way, if you don't want to count the wick. But then a higher low. And then a lower high. And then a lower low. And that puts us this month, we're bullish. Pretty good bullish move off of this month. All right. So pretty much still in that down area. However, I'm going to show you something in just a second. All right, so this is the weekly. Now this is where, let me see if I can make it, yep, bring all of it to me. All right, here we go. And so if we look at this whole move, it retraced the whole thing and actually broke lower than it did in 2020. And this is what I was saying earlier about the move from 2020. So this move right here happened in 2020, right? And we will put this on there just so you can see something here. All right, so this was the move in 2020. And you can see the level was met. The level was met. And on this one, don't think it quite met the level on this one. It didn't. It never got up to 78.90. Before it got to 70.90, it actually broke down and broke below, right? And that low point was off of this is 23.41, and it broke it in here, right? So when it broke it in here, now it'll be from here to here. So if we was to draw, move that out of the way, we should draw a reversal piece, which would have been right here, off of this high red. Notice that it says that this price is supposed to drop to 928, but look at this. It broke it right here. So when it broke it right here, this kind of became the new low. Also went up there and it didn't. It crushed it right here. So this high right here would be the one that we have to use right here. And that's currently the one that is saying is the active one for us right here. But notice this zone right here, which is the reversal point before either going down or back up. So if you used to look at this leg, it hasn't reached 1265. Lowest it got was right here. And this one right here on that low was 1456. And so that's significant for me at least, because now I'm looking at the zones in which this should pull back. I'm looking at 27, and I'm gonna blow this up a little bit so you can see a bit better. There we go. We're looking at 27, 30, 32, 34, this area. And we was talking about from this level, which would have been like 14. So you're saying price should almost double right here. And so when I saw this coupled with this about what happened last time, this zone became very significant. And since we had a prior pattern that also, you know, tried to hold within that same area, even this one that pulled back to the $12 mark when it was in the uptrend. When it got to 12, it shot up here to 28. So this same zone for me was worthy of an opportunity, right? And so that's what, and this is on a weekly chart, and I'll show you how I figured out time. So where is it on here? I tell you what, let's do it this way. I wasn't gonna do it like this, but for timepieces, let's do it. All right. And I know this is a lot. And this is my actual screen, so bear with me here. All right, so this is the area that we're at. And let me see if I can blow this up so you can see with me. Yep. Blow this up. All right. And I know there's a lot going on, but this works for me. All right, so right in here, when we started for this move, what I'm paying attention to, because this is in weeks, what I'm paying attention to is something called the ATR. And I give you my theory behind it. All right, so right in this area, at this moment in time, on this particular candle, what I'm looking at is ATR of 320. Now, mind you, we said that we expect price. Let's see if we can do something here. All right, remember we said that we expect price to pull back in this area, right? So since we expect price to pull back in this area, then I'm looking at the price, and I actually got in on this candle, by the way. But when I'm looking at this price, and I'm looking at this ATR of 320, and the 320 ATR, you'll see it flip when I go back to that candle right here. But when I'm looking at 320, there's a theory that I believe in. I believe that if you have something in a bullish direction, that it should be 51% of its ATR. So I'm looking at the ATR 320, but I want to trade this in months, right? So when I'm trading this in months, now I'm looking at it. ATR is for 807. So without being too technical, we should be a little bit more than $4 because $4 is half. That's 50% of 8. So a little bit more than 4. So to give you the actual number, I'll multiply the piece I didn't give it to you, 807, and we're looking at 51%, which is $4.11. So that means every month we need to move $4.11. So now let me give you the piece. So if we're expecting $4.11 move, we're measuring from here to here, right? That'd be a $12.53 move. If we keep going here, that's 1632. We're expecting here, it's 2010. Now, that is the biggest area that we're looking at. So we expect price to probably reach toward 35, between 27 and 35. That's what we're looking for. So if price is expected to get in this range right here, right, we're looking at about a $20 move. A $20 move divided by 411 is 4.8. So 5 months. So we give ourselves a little leeway and say that, hey, you may get a red month out of there. You may get a month in there with price is not going to move exactly what you want to. So we're going to take half of those months and add it to it. And so half of that 4.8 will be 2.4. And if we add that together, we get 7.2. So we need at least 8 months worth of room to make sure that this happens without counting the month that this occurred in. So if we look right, come out of there. We look right here, this is August, right? So without counting that inside of it, we would have been looking at a September move. So we can't count August at all. And so 8 months from September would have given us April, April expiration. Now to show you how that works. So first, let's write a few things down here. Nope, not that. All right, I'm gonna just put it right here. So first thing we expect, price to move from current level to 27 to 35 in the next 8 months. Fibbo, which is what that Fibonacci is what that area is called, is 27 to 35. ATR was 8 point. I think that was 7. Oh. All right, so basically what this is saying that we measured everything out. We drew our support and our resistance. We got 27 to 35. Looking for that range within the next 8 months. Fibbo is showing also 27 to 35. ATR is 807. 51% of that will be 411 per month. Over the next 8 months is what we needed for the expected move. Now let me show you how this works. We calculated this on this. The next month we move 774, right? And if we look right up here at the top, which will be in this area when I put the cursor back on the bar. All right, we see we opened at 1966. The low was 1668. The close was 1735. See, that was that red area that I was talking about when we put it on. All right, now watch the next month. The next month, which is the current month that we're in right now, ATR 7.53. Opened at 1735, but we rose all the way to 2192. But remember, we was looking at around 1484 was the low for this month. I think we got in around 16. So the time period right here between this and this from 16 has already risen up $5 of the 20 that we was looking for. And presently, we're still moving up. And cross your fingers on that part, but we're still in the bullish direction. There's a couple of other things on here too that I want to show you before I show you how we'll do the trade. All right, so on this daily part right here we go. This line right here is a 200-day moving average. I use that because price, when it breaks it, it has a tendency to come back and retest it. Right now that is showing a 32. Right in range of what we was looking for right here. So if price is headed there, we're good to go. I'm a big price action trader. So right now, notice that price came above this zone right here. And some of y'all already know what I'm finna say. This is my biggest trading signal to date right here. Price closed above the 10 and the 20 in a single day. This is a daily chart. So it closed above the 10 and the 20 on a single day right here. And so if we use to change this to candles, so you can see this is the candle. right here. So that would have been a entry for that move. That's how that signal works. See, this is crossing below. This one is crossing above. This is what we're looking for in the bullish direction. It's crossing above. And it led to this play that we're still in to this day. So that's a really good point on that piece as well. I really don't use the MACD for anything but this. And I'll blow it up and I'll show you. Now, one of my trading rules is, in order for me to take this position, let me blow it up so you can see. Oh, did I change that? Yes, I did. Well, it don't matter. We know what the range was. I just can draw it back in the time. That one, in fact, I just take it off. We don't need it no more. All right. Now, so we get a good representation of what I mean. Okay. This candle right here, this blue line is the 20. This red line is the 10. This candle cross before this cross. This candle cross both lines, then price action showed that cross. But this was our entry based on what we've been tracking. This would have been our trading signal. Single day candle. MACD below 0. That's what we're looking for. We're looking for MACD to cross to be below 0. As long as it's below 0, we can trade. If the MACD was in this area, and let me see if I can draw it in and show you what I mean. If the MACD was in an area like this, was above the 0 line where the histogram flips colors, if it was in an upper area like this, it's no trade for me unless I'm short. So I always want price. If I'm going long, I want the MACD to be below 0, because to me, that's where you're going to get your best price. And to show you some instances of an example trade of this happening, we're going to go and look at the actual options profile for this, and I'll show you the trade. So right now we're trading. You could have traded this breakout right here if you wanted to. Not part of my setup, but you could have. This bottoming effect right here, bouncing here. This was one of my strongest pieces because I saw what price did when it was back here in 2020. So the stocks that traditionally pull back to COVID levels, they attract my attention really well. But here we go. Let's see what happens when we get here. So let's go to, but this is the top-down analysis I was talking about. So let's go over it one more time before I flip out. And go to show you the actual trade. So you drew your support and resistance. You can see those levels. Better come over here and look at it. Much easier. All right. And so current level, we can go all the way back to, let's start on the monthly. All right, on the monthly level, there we go. Current level on the monthly level is down. So we want to make real sure that we're pretty convinced about the level when we take the trade, because the current level for this is down. And if we take out these Fibos, you'll really see it. All right. So current level is down, as you can see. And so I'll draw some lines on here so you can see what I mean. And so what I'm looking for here, no breakup until we got in here. And then it broke up, and then it fell, and it, look at there, came right back under there. So current level is down, as you can see, for the month. All right, now we'll take this off. All right. Now let's look at weekly. Looking for a reversal here or something that tells us that we can get in. All right, so this is definitely down and really down. Swap this to bars. Yep, really down. Not even moving sideways. That's straight down. So this is a potential good play. All right, and daily's possibly. See, down. This is down, right? Lower high, lower low, higher high currently. Reversal. Bad breakout right there. Would have been a reversal. But I was willing to get in down in here because of the level that it reached. And I thought it would have been a good trade. But from the top down area, that's what I see. I have to be real skittish though, because this level right here, remember the color codes we put earlier. So this one right here should be, I think, a weekly support right here. Yearly, monthly. Yeah, it should be a weekly right here. Weekly or daily. It's one of them. Either way though, got a resistance level right here at 25. So according to the current level, we want to see what price does at this line. So this would be pretty good for us. This one will be key too. And this one is definitely on monthly level. So we want to really be careful at 26. So as we're going through these levels, that's why it's so much time, because you want to give price time to do this. It probably go here. Why is that? That's way too long for what I was trying to show you. Hold on. Price can do this. Oh, that ain't cool either. Give me a second. I'm gonna find what I'm looking for in just a moment. Yep. All right, price can. Where did you go? I can't get anything to work for me today. Price can do this. Probably pull back that way. If you can get a break, then hopefully. What I'm trying to illustrate here is that these can be small reversal points, but these black ones might be major reversal points because they're monthly levels. And they derive their thing from here. This is your rejection from here last time. And then this is your rejection from here that time. These are hard rejections right here. So at least trading the 26, 27 for this area. But you could get a breakout, or you could come here. See if I can just delete that. Yep. Could get a point where you get from here up. Come on, thing. Could get here, a little small, break up through there, and come way back here. And then go back lower before attempting to go higher. And it can sit right in this area right here for a while because of the monthly levels. And see how it came here? And this is in days. So notice what happened at this point. Let me delete this. Notice what happened when it came here. So this spot right in here. If I can withdraw correctly. All right, right here. These three candles resisted, tried to break through, fell down and fell further down. So look, fell from here to here. They had to come back here to pick up more bullish momentum before attempting to cross it again, which was right here. Right in here. So with that additional momentum, it was able to break through that time. But notice the retracement. So if you was to think about the retracement from here traveling to here, it would have to pull back pretty deep to come and try it again here. I don't think you break through the first time at all. So I think it's gonna have a we're gonna need some period of getting ourselves together there. But with all that piece in there, that's the top down analysis that I see with Foot Locker. I do have a position on this personally, so but let me show you how we can get some other things here. Oh, don't need to do that. Already in there. All right. So this is something else I was looking at, which I'll probably do one on that, but it'd be way faster than this one. All right. So remember we was looking at August area, right? Let me see. I ain't worried about that. Right here. So the 8-month area would have been April. So you would have had to take at least a June position, right? And this June position, if we was using it, this one is way shorter for a reason. That's something totally different right there. But right here, we would have been looking for a position similar to this. Now, I say 1050 right now for this, which means 1050. But let me show you something. So if we copy this and we put it here, and we put that up here, right? Let it all go in there. We come here to charts. And what we're gonna look at is this part. We're gonna force it on back. So right here, and we won't go back that far. But anyway, what I was gonna show you is when this on the stock on Foot Locker had got right in here. This is the drop that we was talking about. The 1484. This is the one, right? Which is 823. If we go back and look, I think we control V there, right? Yeah. Oh, I don't wanna do right. Anyway, it would have been a little bit more expensive to put this play on at that point, right? But notice that right now it's 580, right? Now, if we was to do a, I don't know if it'll let us do it. Let's see. Let's see. I need to go back a day. 28, 23 maybe. Oops. All right, 24. So we got date. Yep. All right. Right in here. All right, we should be coming up good now. Okay, there we go. All right, so what we're looking for is a 12.5. 450. I mean 650 is what the cost was right here. That would have been a delta of 81. Now, that's just purely just putting it on, right? And as you put that position on, just looking at the delta for it, because once we pick direction, we could do one or two things. We can pick the 80 strike, right? And since we're buying all the way out here in June, that would have been because April is not available, so we would have had to buy it June. So by buying June with the 8 month scenario, we could have came in at 650. But watch, every month, in September, you can sell the 20 or the 25, and they say 10 cent and 20 cent, but like the 30 cent. But the rule is it's $30 or $10 a month. So when you look at it, you can sell it today or sell it, whenever. But the rule is, you're gonna have it for a period of about 8 months until you can reach your price point. And what that means is the further this gets away from where we start. So let's say we originally started selling the 25 in September, right? And let's say we made $10. We took that $10 in. Well, that's $10 for us. That don't change our position there. But let's say that it did go to 25. Well, the distance between here and here, we'll say it's $8, right? So we should be moving at that particular point about, is this moving up now? Yeah, see, it's a delta of 1 already. So that distance between here and 25, we can say it's $7. So 700 is our guaranteed money against our money. So that's 100% return. Plus, each month until we reach that level is $10 per contract. So we're making $10 per contract every month. We're looking for 100% return in the long run, and that's what makes this whole part like very, very good, especially for me, because it's all about how can we maximize our return without sacrificing all of our capital up front on a maybe play. And as you can see right here, this is now October, right? So let's see. If this being October, then we can fast forward time. These expire September the 15th. So let's use September the 18th, right? And we're gonna just see how did our 650 change for one, and two, how can we sell the October expiration, which will be October 20th, which is coming into where we are now. All right, there we go. All right, so look. So now I got the 25 to $5. So we're gonna make $5. Made $10 last month. We can make $5 this month. Actually, I know for a fact you would have made more than $5 off this 25 if we would have just waited for a little bit. But let's just say that we got a little ant. Say we wanted to go ahead on and put our order in on 25. We just accepted the 5. Well, that's fine. Got it in there. Got liquidity by the open interest. Everything's good to go. Got that 5, but watch. 820. So even though we only been in this trade for about a month, and now it's sitting at 820 for the $10 one, or 720 here, or 620 if we had the 12. And remember, we had the should have been the 10, but that's where we're sitting at now. So we've been making money the whole time that we've had it on. Plus, we're looking at making even more because of what we originally started with. And let me just make sure that I want to make sure that I tell you correctly before we. I think it was 20. I think it was 24. Making sure that that's the one that we had there. We talking about the June. All right, so we had the 12.5. So watch. When we speed time up. I took the 18. Now we're gonna see. So we already made some money. It's showing 680. 82 delta. Still doing just fine. I ain't lost. Right there. Now watch. And we can just come completely out of this actually. Turn it off. 12.5, 10.50. And we paid $6.50 to get in. So we up 400 there. We would have made money off the 25 the first time and the second time, so additional $15 is what we're up per contract. So that's pretty much how I do my top down analysis. Now I'm gonna probably have to change this to another video because I think I've been quite long winded with this one already. But I want to evaluate I think it's this one. This one is falling pretty hard. So let's look at VSTO. We'll do analysis on that one right quick. Yeah, let's do that one. Yep. 30 is a very good level for that. All right. VSTO. All right, y'all. Have a good one.